The stock market is a giant, globally organized marketplace that moves huge sums of money back and forth every day. Products are sold in shops and in the whole world, so a lot of money every day. In order to understand the stock market, we need to understand what a stock is. Look at the wallet. A stock, also known as a share, is a financial token that signifies ownership of a company in some proportion. When you own a stock, you own a portion of that company. For example, if Chuck E. Cheese had 1,000 shares and you bought one share, you would own 1/1000th of Chuck E. Cheese. The shareholder, also known as the shareholder, also focused on the owner of the company. If you share, you have your own business. For example, hand over the cheese and 1,000 cheese tools, or you can buy it. Have 1/1000 cheeses. When the value of that company increases, so does your stock price. How about as the value of this business increases, as does the value of your work? Yes, actually. Stocks allow a company to raise massive amounts of money with basically no extra effort. Make lots of friends, but never leave the company. The stock market bases the value of a company on its potential earnings down the line. This means that a small company can earn millions of dollars if investors think that they can succeed in the future. And if a company wants to sell their shares, they need a place to do it. That place is the stock market. Reasons for selling the company. This will save you a lot of money. By doing so, the grades will not increase. Also, if the company wants to sell its shares, it needs space to do so. Space Stock Exchange. Companies list shares by selling them through an initial public offering, or IPO. This changes a company from a private business to a publicly traded one. Once a company's stock is listed on an exchange, the public can buy and sell them. A company known for its trade. This is a company. They are not sold in exchange for wax. Okay, here's an example. You list a table on Craigslist for $100, and then you get 100 emails from different people saying that they want to buy that table. Now you start thinking, maybe I priced the table too low. So you relist the table at higher and higher prices until it reaches the very most that the last buyer is willing to pay for it. If you stop receiving offers, then you'll likely start dropping that price until someone bites again. Example, if you build a $100 Craigslist, you will receive hundreds of emails from others asking you to buy the list. Now you think, maybe this table will find me, huh? Upgrade to the highest and highest levels until the end user pays the same price. Without a paycheck, we will begin to reduce costs until someone gets a job. This is basically how the stock market moves, except it's not just one person on Craigslist adjusting the price of a stock. It's supply and demand, driven by millions of transactions every second. The speed of the stock market is important. Craigslist still didn't change prices, however, but had millions of transactions per second related to sales and demand. The stock market is composed of millions of investors and traders that all view their investments differently. So prices fluctuate based on the opinions of these people and the company's earnings and operations. Powerful technology offers nothing new. More importantly, millions of families have lived there for millions of years. If more people buy, the price climbs. If everyone wants out of a company, the price falls due to lack of purchases. Soccer discs are also sold with essential products. If they want to stay in the market, the price is too high. I have to pay. Pay who? Well, if you do it right, you can make a lot of money, but it's a long game that's really tough to predict. If you bought $1,000 of Amazon stock back in 1997, you'd have roughly $1.5 million today. It's a long time to wait, but an investment like that is worth it to many people. Look, Emu, if you bought 1,000 shares of Arizona in 1997, now it's almost $1.10. Despite all this, owning a property is still far from the average person. Basically, as long as you're earning more than 3% on your money invested in the stock market, you're doing better than you would just keeping your money in a long-term savings account. On the other hand, if you earn more than 5% of your income, you need to be more selective about how to help others. If you want to purchase part of a company that you think will succeed, the first thing that you need is a trading account. You can start one with a common provider like E-Trade, or you can use a free service like Robinhood, which doesn't charge brokerage fees. Well, no happiness, no time, no friendship, everything has to be shown. To do this, you need a $1 million cash soup. You can use the appropriate service of Robinhood. Once you have a trading service account, you can decide which company's stock you want to purchase. You also need a certain amount of money to do this. Stocks can range from a few cents to thousands of dollars, and you can't just buy a piece of a share. It's all or nothing. Once you have an account, you need to choose the company you want grabbing from. Money. Did you buy the stock? The cost of the product is thousands. It's clean. Before you make a purchase, you'll want to do research to make sure that you understand what a company does to make money. See what experts think about a company before you buy it. Before you buy, make sure you do not want to start a business. Okay. Ask your doctor before buying a business. For the beginning investor, the best way to get involved is to take a little bit of money that you're okay with losing, do some research, and invest wisely. Getting started is the best way to deal with it. Win. If you want to learn more and start investing, you can check out some of the resources in the description below, and let us know if there's something else that you want us to try to explain. Being a good investor. Working hard means finding a small car, buying a car, and buying a car.